Hello everyone, welcome back to our channel. Today we're diving into the latest bank reports from some of the biggest financial institutions in the world. We'll break down the key points, summarize the findings for each bank, and make predictions based on these insights. Let's get started. First up, we have the Bank of America European Fund Manager Survey. This report highlights key trends and sentiments among European fund managers as of July 16, 2024. Fund managers have a more optimistic view of European economic growth, with a significant increase in those expecting a stronger economy over the next 12 months. However, inflation remains a top concern, with many managers expecting higher inflation rates to persist. There is a notable shift towards equities, particularly in sectors like technology and healthcare, driven by their robust performance and growth potential. Conversely, there is a reduced appetite for bonds, reflecting concerns over rising interest rates and inflation. Next, we have the Bank of America Global Fund Manager Survey, offering a broader perspective from global fund managers. A majority of global fund managers are bracing for a potential recession, with concerns over geopolitical tensions and economic slowdowns in major economies like the US and China. Similar to their European counterparts, global managers also foresee persistent inflation pressures. There's a trend of increasing cash holdings as a defensive measure, with managers preparing for market volatility. A strategic shift is evident, with more investments in defensive sectors like utilities and consumer staples moving away from cyclical sectors. Moving on to the Bank of America's report on the 2024 summer rally. The report notes a healthier summer rally, with increased participation from various sectors, particularly technology and consumer discretionary. Improved investor confidence is driving the rally, supported by better-than-expected corporate earnings. Despite the rally, there are concerns about overvaluation in some sectors, particularly technology. Opportunities are seen in sectors like energy and financials, which are expected to benefit from rising interest rates and economic recovery. Now, let's take a look at Credit Agricole's reports, focusing on the FX market and emerging markets. The New Zealand dollar, NZD, has shown marginal outperformance, supported by mixed inflation data. The British pound, GBP, remains strong, buoyed by improving UK economic fundamentals and hawkish BOE expectations. The USD has regained some ground driven by positive retail sales data, but overall spending momentum is slowing. The Brazilian real, BRL, faces fiscal uncertainties with concerns over the government's spending plans. South African rand, ZAR, and Mexican peso, MXN, are underperforming despite broad USD weakness. Next, we dive into Citi's reports on FX strategy and market commentary. The recent sharp drop in USD JPY is attributed to a summer squeeze of JPY shorts with significant trading volume spikes. Key support for USD JPY is at 155, with potential for dip buying. There is a trend of broad-based USD selling, with significant moves in EUR-USD and USD CHF driven by positioning cleanouts. Lastly, we have Deutsche Bank's Chart of the Day report focusing on equity market positioning. Mega-cap growth and tech sectors dominate positioning, with significant YoY growth. A shift in positioning is expected as earnings growth in other sectors catches up. The report anticipates continued above-average earnings beats, supporting market stability. To summarize, here's a quick overview of our findings. Economic outlook. Mixed sentiments with cautious optimism in Europe and concerns over global recession risks. Investment strategies. Defensive strategies and increased cash holdings are prevalent. Market trends. Strong summer rally, but watch for overvaluation risks. Predictions based on reports. Equities. Continued strength in technology and healthcare, with potential sector rotation towards energy and financials. FX markets. Watch for USD volatility, strength in NZD and GBP, and emerging market currency fluctuations. Predictions for currency pairs based on all reports. EUR-USD expected to remain stable with limited movements until clearer signals from the ECB and political developments in the US. Potential for slight downside due to Eurozone growth concerns. USD-JPY likely to weaken further as Japanese yen gains strength from domestic inflation trends and potential BOJ policy adjustments. GBP-USD potential for further strength if UK inflation remains steady, reducing expectations for rate cuts by the BOE. NZD-USD, NZD expected to maintain strength due to better-than-expected economic data and dovish RBNZ stance. USD-CAD, likely to remain under pressure due to softer Canadian CPI data and expected BOC rate cuts. AUD-USD, potential for slight strength in AUD as the USD remains under pressure, but watch for domestic economic indicators. USD CHF. Broad-based USD selling might continue to pressure this pair, with CHF benefiting from safe haven flows. EUR-GBP expected to remain around current levels, with slight potential for GBP outperformance if BOE reduces rate cut expectations. USD/BRL. Volatile with potential for BRL weakness due to fiscal uncertainties in Brazil. USD ZAR. Potential for ZAR underperformance despite broad USD weakness due to domestic economic challenges in South Africa. These predictions are based on the latest data and trends observed in the bank reports. Keep an eye on economic indicators and central bank policies for any changes that could impact these forecasts. Stay tuned for more insights and don't forget to like, subscribe, and hit the bell icon for updates. That's all for today's analysis. Thanks for watching.